How would you know if your home is underinsured? With the rising cost of building coupled with the rising cost of insurance, which has followed our seemingly never-ending stream of natural disasters in this country, as well as rising inflation, how are homeowners managing to keep up and ensure they're adequately covered should something happen to their greatest asset?
Welcome to The Elephant in the Room. This is the podcast where we love to talk about the big things in property that never usually get talked about. I'm Veronica Morgan, real estate agent, buyer's agent, co-host of Foxtel's Location Australia and author of Auction Ready.
And I'm Chris Bates, mortgage broker. Before we get started, I need to let you know that nothing we say on here can be taken as personal advice. We always recommend you engage the services of a professional.
Don't forget that you can access the transcript for this episode on the website, as well as download our free Fool or Forecaster report, Which Experts Can You Trust to Get It Right? theelephantintheroom.com.au.
Today we're joined by an expert in what it costs to build a building, Marty Sadlier, Director of MCG Quantity Surveyors. We first met Marty back in early 2021, episode 164 if you want to go back there, when he brought our attention to exactly how widespread the problem of underinsurance is in this country. Since then, we've had widespread flooding, with many areas inundated more than once, and the problem has expanded from underinsurance to many areas being uninsurable. We've also experienced substantial increases to the cost of building materials and labour. So we've asked Marty back to fill us in on the impact that this has had on Australia's underinsurance problem. Thanks so much for joining us, Marty. It's a bit of a serious topic.
Yeah, thanks for having me. And I think it just shows why it's so serious, because we're still talking about it now, and we have for sort of 20 years, you know.
But I mean, have you noticed in the last 12 months that it's just because of building costs or because of people making cutbacks to, you know, their expenses? I mean, probably counselling policies has been pretty prolific as well. I mean, yeah, what are you noticing there?
Yeah, so we're noting lots of different sort of pressures. So, yeah, look, let's just go straight to the category events. The East Coast floods that we had earlier this year have just come out as being the second biggest natural disaster on record in Australia, second to the big hailstorms that we saw in Sydney many years ago. So it's number two. So it wasn't just a small event, I guess, and we already kind of knew that, right? But at least now we've got for the people across the country that weren't on the East Coast, get an understanding of just how big that was and how big it is. I mean, you've only got to open the papers today and see the central western New South Wales, Dubbo in particular, Gunnedah, they're all underwater, right? So it's not just on the East Coast. La Nina is going into a triple dip, a third year. In Australia, we tend to get most of our rainfall in the summer period. I think it was last Thursday or last Wednesday at 12 noon, Sydney recorded the wettest year on record. We still have 3 months to go in this year. So, we've got more rainfall to come, and we're going to have more issues and more pain points. So what do those events do? Look, you can be insured. That's got nothing to do with underinsurance, but how it's going to affect the underinsurance is when all those materials are now required to go to a particular place to be rebuilt, it's putting demand in other areas, and it's putting just demand on our resources, our supply chains, and what we can get. So even though you may seemingly feel that you got the right level of insurance on a property, just because of external factors, you're going to be short. And, the time, we talk about business interruption when we talk about insurance, and we also talk about lead times and cost escalations. If your property is destroyed today, you're not getting a builder tomorrow and getting it rebuilt straight away. So it's actually going to be, what's this going to cost next year? Because that's when they're going to start working on it. So the factor is, it's not just the cat events, it's also the supply chains and all these other issues that we're still trying to get materials in from other countries. The US is, going through the roof.
Areas that are becoming uninsurable, like are we seeing, if you're thinking about Western Sydney and they're flooded 5 times, or Hawkesbury, they could get building insurance in 2020, but in 2022, 2023, they can't get insurance, or the cost has gone up.
Yeah, and that's
200-300%, where you can take insurance, but you're just going to pay through the nose.
Yeah, and look, there is a connection between underinsurance, lack of insurance, rental crisis, and homelessness. Right? They're all very interwoven. And the fact is that Lismore, I think, has had 17 floods now since they've been recording up there. There are going to be insurers that won't be wanting to go back into certain areas. They'll have to pay out this time, but they're not going to reinsure. Now, there are properties that are still that are probably being repaired right now, right? That are still going to be exposed in the next few months with more rainfall coming. But the reality will be councils may. So I'll jump back a bit. We talk about whose problem this is. It's not just the property owner's problem. Like, we are all in this together. Like, councils will say, well, it's not our problem. You need to speak with the property owner. Well, hang on a minute. In, say, Lismore as an LGA, insurance companies may no longer insure property in certain areas of that LGA. Those people will either move from that local government area to another area because they need a job or they need to live somewhere. So that council is going to be impacted by that property being destroyed because they're no longer going to be a ratepayer in that area. They're moving somewhere else. Businesses and people who have lost their properties or homes, whether you're a self-employed or you're an employee, you will have to put bread on the table. You need to keep a job. You may have to move for that. So there's no given that these properties will be rebuilt. We see that with bushfire claims. There won't be a bushfire in an area at all. It might have a BAU rating of 19. Suddenly a bushfire comes through and destroys a heap of homes. That area has now been rezoned as a flame zone or a BAU 40 zone. So to rebuild that property is costing more because it's being built now to a different code.
This is a really interesting thing, right? Because we interviewed a historian, Margaret Cook, back in episode 2020. That sounds like I'm saying the year, 228, right?
Hey.
And she wrote a book called A River with a City Problem, right? And it traced back the history of development. And so it's sort of interesting that some councillors might think, oh, it's not my problem, it's the property owner's problem, because, in that instance, and I'm sure in Lismore as well, there's plenty of evidence at plenty of points of time in a history of development where the decision could have been made not to build in a floodplain or to stop building in a floodplain or to start relocating earlier after earlier floods, for instance. So that the knock-on effect of I guess, bigger interests than individual owner-occupiers, making their decisions really not in the best interests of necessarily individuals, that is obviously being recognised here on a grander scale, especially when you've got a place like Lismore flooded, 3 times now this year? 3 or twice? It doesn't really matter. Once is bad enough. But,
3.
3 times.
Yeah, and they're going to have issues there. I mean, I think there are two capital cities or 2 major cities in this country that are on a harbour, Sydney and Newcastle, and the remainder are on a river. And of the ones that are on a harbour, inadvertently, they are connected to rivers. Newcastle with the Hunter River, and I think it's the Williams River, and then Sydney, you've got the other catchments that are coming in. You've got Georges River and Nepean River and Hawkesbury Rivers and all those kind of things that are coming in. Parramatta River obviously connects to the main harbour. So, the reason I mention that is that these cities have rivers in them, and rivers are not, for the intensive purposes, not that harbour which is just tidal, fairly consistent, except a king tide, right? You've got water coming down these from inevitably a long way away. There's a threat in the central west of New South Wales at the moment that is still coming, even though the rain stopped 3 days ago. It's the water coming down these rivers. So when we see these places like Lismore, we've had heavy rains in Brisbane and those kind of things, it's still coming down the rivers to them. And we've built on these sort of river plains and these river areas. There comes a time when the accountability is more than the property owner. There are pressure put on councils to build in these areas. The ABS came out earlier this year on the back of some information with the Insurance Council of Australia that 23% of all Australians have no insurance at all. So there's 10.7 residential or 10.7 million properties in Australia. So you're talking about 2.44 million of those properties don't have any insurance at all. Now, when they delved into the demographic of those, they were not in full-time work, they were non-tertiary qualified, they were young, they were in metro areas. Now, these are people who desperately need insurance, but staggeringly, that included mortgaged properties. So I don't think it's it's okay anymore to say that it's the property owner's problem. It is the council's problem. It's also a financier's problem. If a financier isn't worried about whether someone has insurance or not, and they're the mortgagee, what hope have we got in terms of education to convince the end user that they should see the value?
It's an interesting one though, because obviously with the loans, it's the finance point of view. It's something that's afterthought. You purchase the property, and then the bank will basically say to me, and then I'll say to the client, "Hey, you need to get some insurance on this." Oh, right, okay, yeah. How much do I need to cover it for? 350,000. Well, some banks just leave it up in the air, as long as you got some cover. It's really, and that amount is usually, and sometimes they go off the valuation, but the valuation is usually a quick number that they pull out of nowhere sometimes. So, the client's just, in the dark here. They're just literally trying to satisfy that for the bank and the minimum required. And then once they've got the mortgage, then there's no ongoing checking from the finance company. Not every year you have to upload your building insurance. And so if you cancelled your building insurance, which is quite easy to do, you just don't pay a direct debit. It's like, well, what's the risk? It's unlikely to happen. And then all of a sudden you're uninsured completely.
It could be even... Yeah, I think it could be even less than that, Chris. I think that when you look at it, it could just be that a bank's looking at it and going, does that cover even, like if it covers out what we're owed on a property, the tick box is done.
Yeah. And we talked about this when we last met you, Marty, the difficulty in actually working out how much to insure your property for. And back then you shared with us the incredible statistic that 83% of Australian homes were underinsured, which is just absolutely staggering. I'm guessing that that's gone up, firstly, but I also, if you can sort of fill us in on that, but also what I'd be keen to talk about is what is the difference between, what's the problem with getting a valuer or using a valuation when you're trying to work out how much to insure your property for?
Yeah, we see the number to be in the early 90s now, and that's on what we can see in the market. And that there hasn't been an update from the Insurance Council of Australia on that. We would see that it would be certainly into the 90s. There are insurers that sort of note that 93% of all New South Wales property has no flood cover at all, and there are very big statistics around the level that we've got. The reality will be that people have tried to bank off the back of a valuation report. Now, I need valuation reports done on my investment properties and different properties. It's a tool, very much required, but it's the wrong tool to be establishing what your replacement cost is for insurance purposes. There's a lot more to it, and the reality will be is that the only profession that is out quantifying the costs on a job for a builder, for a developer, for a banker is a quantity surveyor. So a builder doesn't use a valuer to determine what tender he should put in on a job, and a developer doesn't use a valuer to determine what builder they should be picking out of three to and understand the construction costs and manage those. And likewise, either does a financier. But it seems when it came to insurance, that was accepted. We can just use a valuer's report. Now, likewise, none of those professions use a cost calculator to work out those prices. A builder doesn't go onto a cost calculator to work out what this particular property is going to build so he can put a tender in. But that seems to have been acceptable from an insurance point of view. And I've been very critical of those over the years, and certainly on the back of ATSIC doing their searches as well. I did ATSIC did a report, in 2005 on the accuracy of cost calculators and found them from highest to lowest to be out by around 137%. I hadn't seen an update on that for a very long time, so I did my review of that in 2020. And I used 6 calculators, and we'd just done a full bills of quantities for a builder who was building a property in New South Wales. So I thought, okay, I'm going to use that property, which we know the actual cost because we counted taps and tiles and we did all that. I want to see what I can get out of, say, 6 calculators on insurers' websites, which I did. And I found the range to be out by 125%. Now, I was challenged just recently talking to some people, and they said, we'd love to see an update on that. I've gone back onto those 6 calculators, and 4 of them do not exist on those insurers' websites anymore. Two of them have a big disclaimer underneath there saying, we can't, these aren't accurate. To get a proper, cost analysis, you should engage a quantity surveyor or a valuer, albeit I think that's still wrong. But the reality is they're still sort of noting that. But you're starting to see that there's a little level of, exposure here, because a cost calculator was a tool to give a high level understanding of something, not what you are actually going to sign a contract for with a builder, or not what you are actually going to insure your property for. And it is certainly not allowing for what things are going to cost in time when you are actually going to be rebuilding this property.
Well, the problem with that, though, is that, okay, so my house burns down today, or hopefully not, or goes underwater today. So then I've got my house insured, even assuming that I've got it accurately insured, then you got to go through the whole process of, getting your insurance paid, I guess, or working out new plans, new approvals, new builder, et cetera, et cetera, et cetera,
Yep.
and that goes in the pipeline. So at what point does the insurance company pay out? And then also you've got accommodation. So you've got limited period accommodation, which I hear doesn't often cover the actual period of time that you're out as well. So there's lots of other ways you can be underinsured. But just that time lag, particularly in an environment with shortage of trades and increasing costs, who bears that? Does the insurance company make a settlement as quickly as possible and then leave you with the money to allocate as you want? Or do they actually pay out the builder's contract when the builder can actually start the work? Or is it different by insurance company?
Yeah, well, if you're coming up with a sums insured, so in the residential policy, there are usually two main sort of ways you can go. You can go sums insured, or you can go total replacement. So total replacement, people see those words and go, that's what I want. It's just total replacement. But the reality is, if you have a 4-bedroom brick veneer home, that insurer has just got to rebuild a 4-bedroom brick veneer home. It may not be the same level of finish inside or the exact same style, right? So the reality is that's what that replacement is. Now, if that insurer is also using, a builder that they do a lot of work with, they get discounts. I mean, I do expert witness, and I'm always sort of looking at these things. And if they're going to settle, an insurer may say to someone, we're going to settle, we're not going to rebuild, we'll give you the 400,000 payout. Well, mum and dad isn't getting the discount from the builder. So, and the scope isn't necessarily exactly the same. It's not the exact same finish and style and those kind of things. So the other way is sums insured, a bit like in car insurance, an agreed value, right? So your sums insured would be where you come up with what that amount's going to be that you want, and then you will pay a premium accordingly. So in that instance, that's certainly where you would add in your cost escalations so that you know that you're going to have enough, you're allowing for what that time would be. So yes, you would be covered.
We all want to pay less insurance, though, don't we? So I guess that may well be our own reluctance to have high insurance costs that results in underinsurance. So not only potentially are we using the wrong tools or no tools, but we think, oh no, look, I really don't want to pay $4,000 if I can get away paying $3,000. And what's the odds? It's not going to burn down anyway. I'll run that risk, And I guess that's the danger, isn't it, to all of us?
It's no different to car insurance and health insurance and all those things. It is the name of the game of insurance. So the reality will be, yes, we don't want to be overpaying, but, whatever that premium is over the next, say, 10 or 15 years, if you divide it by, that, and it works out at, $300 a year or whatever it might be. I mean, if you're short 300,000 on your property, there's a big difference. I think you need to weigh it up over the journey of what that will be. And certainly the exposure is, especially when you talk about commercial property.
Yeah, I mean, I think these things wipe you out, right? Like if you get phone insurance, $150 a year or something, you lose your phone, a couple of grand, life goes on, right? But if you've got $1 million debt on a property and it burns down and that land value is anywhere $500,000, then you got to bulldoze it, you know what I mean? And you've still got $1 million mortgage. Well, you're bankrupt, right? If you don't have cover. And that's basically, there's no way out of it. And, if that was all your life savings was in that property, so the sake of not...
And that's worse. That's worse in a category event like up in Lismore, right? Because if that property is now, if you cannot get insurance on it, either can the next person buying it, how are you going to be able to buy that? Because part of your mortgage is going to be you have to have insurance, the initial one. You're not even going to be able to buy it. So it's not, you can't even sell it. And its value would be nothing, right? So not only has it been destroyed, you didn't have insurance on it, but no one's going to want to buy it or live there, especially if a council's going to say, like,
Condemn it.
you've just got
and
nothing.
Then it's in a flood zone, everybody knows, so it's devalued anyway for that reason. And then you've got to pay for somewhere else to live. But on the strata side of things, so you talked earlier about a developer, you sort of did some comparisons on with those calculators versus the work that you guys have done. So with strata, every so many years, they need to get a valuation done on these buildings. And this is magnitude. This is a greater magnitude now, because an individual house is one owner or a couple perhaps own that property. It's one dwelling. Whereas you've got a block of units, it might be 6, it might be 60, it might be more than that. And if they're relying on a valuer to come up with that, and that's common practice, by the way, this is common practice. I read strata reports all the time, and there's also a requirement in New South Wales anyway that they have to get a valuation every so many years. There's no requirement actually that valuation has to be conducted by a quantity surveyor. Well, it's not a valuation, is it, if it's a quantity surveyor? But so there's a potential for underinsurance. So I guess your statistic of early 90% of Australian dwellings underinsured, does that include all those apartment buildings?
Yeah, and the reality there is that then would go because they're not treated. It's treated as one, right? That strata is treated as one property, not 60 in that instance, right? So then you start to look at the onus on duty of care, that you've got an owners corporation or a body corporate that has organised to get that done, and another owner in that property has been they've had insurance on a property that hasn't been calculated properly. Who's at fault there, when that hasn't been done through the right channels or whatever it might be? And then in the instance of it being a commercial property or a strata property, that there may be a co-insurance, you deliberately didn't insure it for the full amount, so therefore we're only going to pay out X some percentage as well on the actual payment. Suddenly you are short. And the reality, therefore, would be that you've got a lot of property that has been undercalculated, and you've also got the individual owners in those would have their own contents insurance. But certainly, who is now responsible in this point that this property was deliberately or not through the right channels underinsured? And if you're taking that to a court case, or certainly going up against what was best practice, I think some of the tick boxing of cost calculators, that is not the right way of going about it.
It is actually quite alarming, because this is the first time I've ever thought of this, I think. This is widespread. I mean, I've never seen a strata report, because we do look at the sum insured and the valuation. I don't think I've ever seen one where it wasn't relying on a valuation. So that means that they're, like you're saying, using the wrong tool, using a screwdriver to hammer in a nail.
Yeah, and they'll often have a disclaimer in the valuation report under the little section that they have as replacement costs, that we can't stand by these costs and you need to engage the services of a quantity surveyor. I have valuers that ring up and ask me all the time that, hey, I've got a 3-story red brick walk up in Coogee that I need to do a replacement cost estimate on. How much a square metre should I be putting on it? There's two big problems there. A, they're ringing someone who does it for a living and is the only qualified profession to do so. And B, they're more than happy for me to give them a cost over the phone. We're happy to have been to the site, measured it up, So it just kind of shows the mentality around it. So, we're throwing sort of, to a certain degree, part of this property owners under the bus, that there's a lack of education and naivety towards property under insurance. But, it's supported very sort of robustly by, say, the financial lines that don't give it enough cred, and, valuers that don't even give it the right cred. So, what hope have people got?
So what do you think the solution is a regulation? Like, if you had the dream scenario tomorrow, obviously you guys are incentivized to get this changed. You work in this industry, right? So everyone should be doing this.
Yeah.
I mean, do you think it's really a good option for every residential property to engage a quantity surveyor to figure it out, or do you think they should just go, right, well, look, maybe it would be to replace it's $1 million. Maybe I should just take out 1.3. Like, should people just overinsure themselves more than what they think it would cost just to save the hassle? Because the additional you pay in insurance, would that just cover your cost anyway?
Yeah. Okay. So my 10 cents on that and my dream will get to the end. The reality is that ordinarily when there's a category event, so say a hailstorm or a big storm comes through and it'll sort of decimate a postcode, for the want of a better word, right? Now, ordinarily, it might be 4 homes that are destroyed in that postcode. So pick a like Marrickville, right? What will then happen is, insurers will then sort of increase the premium on all property in that particular postcode. So even though your house wasn't destroyed, you as part of that community are going to be helping to rebuild that, right? The reality here is that the category event that we've just gone with the East Coast Low was so big. That's national. It's going to be nation-based, right? And it's certainly state-based. You got a property in Broken Hill, your premium's going up because of what's happening on the East Coast, right? So it's no longer postcode. There are going to be insurers that leave the market and don't even go back into certain markets here. There would be issues now, probably even being able to try and get insurance in Lismore, because insurers would be going, we're not taking on any new clients, we're not modifying any existing claims, we've got an embargo in those areas. So you could even just be timed out, even if you were looking at doing something. But the reality is, what happens is when people aren't insuring or they're under-insuring, it doesn't cost the insurer any less to have to pay that property out, right? But the problem is they haven't got all the money coming into their coffers to do so. So if they've only got 100 people in New South Wales that are insuring their property out of 1,000, then it's that 100 that are paying the premium to cover a bigger net, right? So if everyone took an appropriate level of insurance out, then you would exponentially see premiums come down because there's just more money in general coming in. It's kind of the double-edged sword,
it's a
right?
paradox, that one, isn't it?
But the reality, absolutely. Now, what is my dream? My dream would be that it is mandatory that you have to get an independent person to come up. If they wanted to fix insurance in this country, you'd say it's mandatory. You have to untick a box to say that you're going to get an independent person to look at it, right? But the trade-off to there should be that the client should be incentivised that they actually get a reduction on their premium. Now, there needs to be a percentage agreed on that, but let's say it's like 5% or 10%. Now, the reason I say that is that, well, the insurer is going to be potentially making more money because the premium's higher anyway, because it's now insured for the correct value, but they should be able to be rewarded for that and make it an incentive to get people on the right cover, and that would be the dream. Now, yes, that's incentivised by, well, I would have more reports to do and that, but the reality would be if it became mandatory, there'd be a lot more players that want to now put their hand up and start doing that, right? So I'd have a lot more competition. Like you see that when there's a, solar panel rollout, suddenly everyone can install solar panels, right? Like, so it's not a personal thing that I'm suddenly going to be making more money, because there would just be more people that take it on. But if you seriously want to get rid of an underinsurance issue in this country, and which is connected to homelessness and is connected to rental crises, like the crisis of trying to find rental properties in these areas, they just wouldn't exist, right? Because the properties have been damaged.
Also, I mean, the fact is that if you are adequately insured, then you can rebuild. And there are, particularly if we look down the fires in the South Coast back at the beginning of 2020, there are people that haven't rebuilt because they were underinsured. And so those people are then finding elsewhere to live. And it might be that they're homeless, or it might be that they're taking rental accommodation, which otherwise they'd be able to be in their own home. So you can see the knock-on effect.
They're still in camper vans and caravans on the South Coast at showgrounds. Yep, because they can't. They got no rentals there because there's just no market.
That's another story. We need to do an episode, I think, on the short-term rental market that's also blossomed through the COVID period and had an impact, or had an effect on this problem as well. Back in episode 239, we interviewed climate economist Nikki Hutley, and she's counsel of the Climate Council. And there's a map that they have on their website. So if you want to go back to that episode, and if anyone's interested, and you can actually look at a map anywhere in Australia and see the areas that are becoming increasingly uninsurable due to climate change. So this is a very real issue.
Yep.
And I think what you're saying there is really interesting, Marty, about, if we all actually were able to get the accurate information which allowed us to actually insure our homes adequately, then that's a real rising tide thing, isn't it, really? That you've got a situation where you've got more money in the pool, and so therefore there's less impost on those small percentage of people that actually are adequately insuring their property, which is a problem because there's a big gap then,
Yes.
isn't there? I mean, it almost does need a big campaign to get more people doing this, so therefore that it frays the cost.
Yeah, there's the heavy lifting's being done by the few, right? Which is probably quite common in multiple industries. But the reality will be that the people who are insured and paying the premium are paying a higher premium because less people have now taking it or are leaving the market. And the reality is, as Chris touched on before, that this is if you've got a property that's over $1 million, or even if you don't, I mean, you're talking about a median house price of $1 million. Like this ends you, if you don't have insurance, and it's hard enough to save that kind of money over a lifetime, let alone be it 50 or 60 and got 10 years of a working life.
Yeah, and
left,
also the
right?
Yeah, I mean,
trauma.
it's not just and it's not just in homes, is it? It's like life insurance, income protection, it's health insurance. There's lots of insurance that we are uninsured for. Is it most prolific in the building industry, or is it sort of across the board? It's like 10% of us insure ourselves correctly, and 90% of us don't.
Yeah, across the board, Australia is one of the most underinsured countries in the world
Should be
across
right,
all
mate.
facets of insurance.
So let's
Yep.
let's
Won't
get
happen to me.
some. I think that we've got to all start by thinking. Well, actually, it's all very close to home every time there's a new natural disaster. But let's get some understanding around the impact of rising cost of building.
Yep.
I was at a presentation you gave just over a month ago, and you really went through some quite alarming increases. Do you want to share some of that information with us so we can sort of get our sense of really how much more expensive it is to build a building now, but also not only that, but how much of this might be here to stay versus how much of it is a bit of like the blockage in the pipe, so there's
Yeah. So Australia, there are pros and cons in everything that happen in life, right? And one of the pros with our lockdowns, being an island, we locked down Australia really quickly, and with the epidemic, right? Now, the pandemic. Now, the reality there is that has the negative on that is the fact that we bring in a lot of material. So 60% of our building materials in this country come from China. So we are sitting as a bit of a lag behind the rest of the world with some of our supply and pressures that are coming in regards to material supply. So the US is up about 20.5% in construction costs. The UK is up about 21.5%. We're sitting just behind that. If you map the most expensive countries in regards to cost of construction costs going up, out of about 40 cities that we looked at, Sydney is the most expensive one from Australia, and that's about halfway down the list. So you're talking about, Tokyo and Geneva and London and those kind of places being at the top of the list, San Francisco, and yet Sydney is halfway down because we're sitting down there behind that lag. The US has had a 25% increase in housing approvals on last year. So they're going through this property sort of rebuild boom. Now, the problem there is, we can't get materials out of the US. They need them. And same with these other countries who are having these same sort of problems. The material isn't coming in here because they need it. So we're seeing big delays in that. Last year, you were talking about if you needed, reinforcement pipe for stormwater for subdivisions above 375 mil, it was a 52-week lead time. Like a subdivision can be built in 4 months, and yet it was a 52-week lead time just for the pipe.
So that's increasing cost of everything, really, when you think about,
It's holding costs, the interest, all those kind of things.
Good point.
There's a
and
flow
also you
on there,
can't
right?
build anything if you
So-
can't actually connect it to the infrastructure. Then you
Yep.
can't build at all.
If you like what you're hearing here, please share this episode with others you feel would benefit. And while you're at it, why not leave us an iTunes review? 5 stars, please. Every review helps make it easier for other people to find us and hear what our amazing guests have to say. We love hearing your questions, and we're planning more listener Q&A episodes. Please send your questions in. You can send them via the website, which is theelephantintheroom.com.au, or directly via email to questions@theelephantintheroom.com.au.
Yeah, so then there are sort of there's remodels in trying to redesign that doesn't need that type of pipe or size pipe or whatever it might be, right? So there's every sort of way you're looking, it's costing a little bit more. when you're looking at the high volume builders, so your Metricons and all those kind of properties that, their typical average build time was around 26 weeks. It blew out by an additional 16
Wow.
weeks.
There you go.
Now, they weren't increasing their construction costs in terms of contracts, right? But they're absorbing 16 weeks of holding costs and, their overheads and that sort of stuff on a property that isn't being passed on and couldn't be passed on. So the reality is that the time was getting blown out exponentially on being able to deliver these. The looking at, we haven't had migration in this country for the last few years, so there is over 100,000 vacancies in the construction sector that we need right now. Like we're short now. There's been so many building companies go under in the last, and that would have been part of the presentation I spoke to you, Veronica, about just the list of some of the big players that have left our landscape. Two companies, in particular, had, when you add it together, had $2.5 billion in their property pipeline, and that's just two companies out of around 80 that have left. Last financial year, there was 3,917 properties put into liquidation or administration in Australia, and 28% of them were from the building sector. So when we're talking about needing, having supply and demand issues, we also need builders. And these builders that are leaving these properties half built, well, someone else has got to come in and do that. And that costs more to do. That new builder's taking on that risk and whatever that might be. The Australian Professional Builders Association researched 750 builders, and they found that over 50% of them in Australia were running at negative equity. So they're forecasting that there'll be about another 9% of building companies leave the space by the end of next year. That'll be in the thousands. So, we're working with builders now doing their tenders for jobs that they've got coming up, and they're booked out for 2023. So, you have a problem in your house burning down next month. It's hard to get a builder, right? And the reality there will be, if you cannot wait that long and all those kind of things, you're going to pay for it.
So, Marty, I mean, all these sort of builders going under, is there a part of that is that they've fixed price contracts that they committed to before all these increases? Have you seen that, a bit of government stepping in and giving builders a bit of leeway here and saying, hey, I know you signed up to these contracts, but, you either go under if you sort of try to do that. So rather than, that's not a great outcome for the consumer, right? Because the builder goes under, they get left with a site, they have something half built.
Yeah.
We've had clients in this situation, a couple of clients, to be honest. Or, for example, are they giving the builder and saying, hang on a sec, you've got the ability to renegotiate this within reason? Then the consumer has to come up with that. Otherwise, the builder just gives the builder a little bit of protection, because no one could foresee what happened. And, it's a bit hard that they're basically the one carrying the can. Plus, the consumer doesn't get a house built, and then they've got to pay more anyway. So...
Yeah, that's right. And it's always going to cost you more when you've got to get another builder in, right? So even if the contract doesn't say that, we say to some of our clients that, be careful the devil, right? Because at the end of the day, no, contractually you are right. They can't pass on that variation for that increase in construction cost, right? But they leave the site. The time it's going to take you to get a new builder, and they're going to then charge you more because of the risk they're taking on the existing works, and it's going to cost more. And you know what? They're going to be charging the same in the increased timber price because, A, they're signing a new contract. They're going to make sure that they've got it at the new price, right? So it's going to cost you more anyway. Whether right or wrong, you need to have a little bit of flexibility around that. I was quite critical of Home Builder when it first came out for some other reasons, but certainly, we saw this even back to GFC. I was managing construction company, quantity surveying company during that time, so I was able to see and draw parallels between the GFC and the pandemic. And it's funny that during the GFC, at the end of that, we had the Building Education Revolution rollout, where they were stimulating through stimulus money for schools and those kind of things. And I remember coming in and doing audits on toilet blocks, built at, Walgett and all these different places for hundreds of thousands of dollars, because it was just eye gouging, through the stimulus. The thing with Home Builder, what happened there with the 25,000 sort of cashback is pretty well builders just add it to the top, right? Because the client's getting it back. So it added on. But what it did do, which no one really, foresaw at the start was builders took on work that they aren't revved up to take on. So, the builder that is only doing 3 or 4 projects a year went, and locked in 10 contracts. Well, the problem is they're not upskilled or have the right people in right positions to manage 10 clients all at once. So then what happens is they want to start those so that they got the grant and that they were under construction. They had time limits, but they were hemorrhaging. They bit way too much. And we saw that with big players. So I'm picking on a builder that does 10 or 3 and should have done, and was doing 10. But there's no different to, say a Metricon that was doing 5,000 that tried to do 7,000. The reality is they couldn't draw on finding those extra resources to build those 2,000 homes. Everyone else was, locking up and taking these projects. So the reality is that they were so over sort of exposed in regards to their work volumes that they couldn't deliver on.
Say that's been a massive failure, that policy, because all it really do is just shot the building industry in the foot. It just basically, forced a lot of demand that was probably going to be there anyway. The reality is
I agree. The demand was always going to be there, right?
But they didn't know that.
They didn't know that at the time, right? Yeah, that's right. So I think that the stimulus was probably required from that injection. But the thing is, it wasn't. There was no sort of real thought process given to what the other end of it looked like and how that would be managed out. Likewise, I think hindsight's wonderful, but certainly allowing, if that was the case, allowing some clauses to be put in contracts as a protection piece around that or whatever it might be. But certainly, builders were taking on work that they just weren't sort of revved up to do.
There's other ways of throwing money into the economy out there. The thing too, though, now, Chris, I mean, you can point to this, but if the builder comes to a first home buyer, for argument's sake, or somebody who's upgrading and stretched in order to be able to get this new home built on this block of land, and they say, right, well, it's costing me an extra 20% or whatever, I need to pass some of that cost on to you, otherwise I'm ultimately going to go broke and you're going to have to go to another builder and it's going to cost you anyway, so you're better off to stick with me. And then the owner or the person that's engaged in to build this property can't get more money. I mean, then what happens? So, because now we've got a situation with rising interest rates and the squeeze on capacity, on borrowing capacity. So that causes its own set of issues, correct?
Well, it does run responsible lending. So a bank can only really responsibly, in law, lend you an amount based on what you can afford, based on your income. And so if you did stretch to your maximum, then you'd be in trouble. And if that maximum's fallen, since now be a new loan application, it wouldn't be back of when you first got the construction loan contract. So it'd be a reassessment. So that would be, absolutely. Your maximum's reduced 30%. So if you, for example, could have borrowed $1 million to do that build and buy that land, well, now you can only borrow, $750. Yeah, well, the bank can't really lend you more money, right? The other issue is valuation. The valuations are all fine when in 2021, 2022 vals, it's a real hit and miss.
It came back a bit.
We're just getting some super, super low vals, which clients are like shouting at us and saying, how was that right? What was he thinking? And I was like, he's getting paid, about $50 to do that. And he did about 13 that day. So he didn't put much thought into it. He was just bloody ticking a box and going to the next property. And then we're getting vals that, they wouldn't even have sold for that in 2021. Like, it's just, it's just crazy. So if you get a low val on a building contract and your building price has gone up, then you can basically go up to, some lenders will do up to 95%. And you might have only had an 80% loan. So you might be able to go to some, but they're not going to want to take over construction midway. So it's a potentially your lender that, you originally got a contract at 80% LVR based on a construction value that was, when you first applied for the loan. But maybe now you have to pay a big lender's mortgage insurance to also do that construction. So, it's a very tricky situation if you haven't got the cash. And I think there's a lot of people don't think about that with the whole house and land package. It's targeted at the affordability sector. It's targeted at people with small deposits. And it's not, it's a highly risky transaction. You've got a land price, you've got to build. And if your valuation doesn't stack up or something goes wrong, well, then it's all over, right? Because you've got no other buffers.
I think we have short memories too. Like, we talk about Australians being underinsured and the most underinsured country in the world. or one of the most underinsured countries in the world. And yeah, we threw out some comments like, she'll be right, or it won't happen to me. But I think especially in the Australian property market, we have very short memories. So to give an example, during COVID, there was rental squeezes in regards to rents were going up, but then trying to secure tenants and those kind of things. And the reality is that I think a lot of investors realised they didn't probably have much in the kitty, to support them on their investments and those kind of things. So if someone, they lost someone, they couldn't cover their mortgage in that regard, right? And yet I talk to people now, not long really after the back of when what we're saying was the end of the pandemic, and people are back on a knife edge taking on investment properties, right? So the reality is we didn't really learn much from that. And another example is I was speaking to an insurance broker about a month ago, and they've got a client that is up in around the Lismore area, and they're in a block of 7 or 9 units, and the water came to the back door of the property. It didn't get in, but it was lapping the back door of the property. And the insurance broker has said to them, look, I think you need to take out flood cover. And it was going to cost each unit holder another couple $100 or something on the premium. And they've come back and gone, no, like we didn't get the water in this time, so why, we're never going to get it in. And I'm kind of like, well, at what point do we take it a little bit more seriously? The water was at the back door, and their example of looking at that through their lens is, well, this was a big flood and it didn't get in, so we'll be right.
Here's the problem. I mean, and earlier on we were saying that councils, part of the responsibility for this, et cetera, et cetera. But then in that particular instance, you got individual property owners who, honestly, they don't. Until we interviewed Margaret Cook, I guess I didn't even think too much about different floods. Every flood is different for starters. But if you live in a zone like that, you really do need to educate yourself as to what the risks are. I think that's just actually your responsibility as a property owner. See, that responsibility, in my view, should be put on those people. It shouldn't be spread around. If you get actually given an opportunity to do something about it and you don't do something about it, then, so there's a lot of issues here at play, I guess. Another knock-on effect of this sort of the shortage of builders, more builders going out of business, the squeeze on profits because of the work that was taken on when those incentives were in place. And it's funny, we interviewed a building inspector called Zahir Khalil on your First Home Buyer Guide podcast. And we came across him because he's started getting a bit of renown for himself with his TikTok videos. And he's a builder himself, and he's very well versed on the various building codes. And he goes through and he videos these properties as he inspects them and shows you how some of this shoddy workmanship, it's scary. He told us examples of where they have been able to, these are pre-purchasing or they're pre-completion inspections that people have engaged he and his company to do. And they go in and like the walls are bowed, for instance. So there's just this workmanship that's shocking everywhere. Waterproofing, a whole bunch of non-built to code buildings, shortcuts, inability to supervise multiple sites. There's all these reasons why you would have trades on site that would actually build in a very shoddy slapdash fashion. But the fact that this guy he's got quite a number, we'll have to put the link in the show notes so you can have a look at some of these videos if you want. The fact that there was just so many, these are common. He said that there were some builders that have agreed to rectify the works on the proviso that he removes the videos from his website, which he's done as long as they do the works. But, that's then also going back and fixing all that is adding to the problem, really, isn't it? They're not doing the right work in the first place. I was alarmed. I know we're going off on insurance as a topic here. I was actually really alarmed to find that waterproofers sign their own waterproofing certificate.
Yeah, and in New South Wales, when you get a construction certificate on a residential property, the mandatory critical stage, so part of the construction certificate is that there are mandatory inspections that need to be done by the private certifier. One of them is the waterproofing, and they've only got to inspect 10% of the waterproofing. So if you're talking about 100 units being built, they've only got to go and inspect 10. So the reality is that we don't do that right. I mean, for people who want to read about defects in properties on the back of Mascot and all those kind of things, certainly a paper was written by Dr. Nicole Johnson. She was at Deakin University and did a joint one with Griffith University on the most common defects in properties, and they bring it down to about 4 or 5 of them. Water egress was one of them. But interestingly enough, when they dove into that even deeper, they worked out that nearly 60% of all of those defects could have been avoided through better design documentation at the start.
Yeah.
So, I think we rush into some of these developments because time is money, and we just get going on those kind of things. And of the ones that were in the construction phase, which was, if you work on the opposite, 40 to 50% of them, it came down to squeezing subcontractors so much with the price point that, they've got to cut corners, they've got to use untrained people, and it came down to morale and all those kind of things. So the reality is that there are a lot of common defects in there that we could be. If you go to, say, a European method of building, if you watch Grand Designs UK and watch Grand Designs Australia, the polarizing thing is that in a UK version there's a project manager and a quantity surveyor on the site nearly every day. Yet in Australia they're not.
Yeah.
They'll just have a head supervisor from a building company there, right? So, and in a European, there'll be a lot of independents, independent project manager. But certainly the QS is on the site every day. So every time that someone says, "Oh, we're going to have to rechange the wall here," is this going to cost more, or what's this going to cost? There's a decision made then and there. They're managing the costs of the job. Whereas in Australia, it's come out once a month and walk around and see what you think. So, we don't put enough, and look at architects. I'm sure you've spoken to a few over the years, but interestingly enough, most architects in the resi space aren't novated through the job. They use an architect until they do their design at the start, and then they just engage the builder and it's handed over. Yet, they don't have the architect working through doing additional detailed design when something needs to be changed and redraw it up so they know exactly how it's going to be fixed or mitigated or what have you. So there seems to be a lack of having that independent project control group on a job for what is best for development or what is best for project, as opposed to what is best for any one particular person's wallet. And I think that's the different mindset.
That's it's a form of insurance in itself, really. Organising or paying that additional money, and that's the problem, is the additional cost. Interesting you mentioned Nicole Johnson. We interviewed her back in episode 112 on that exact report you're talking about. So if anyone's interested in that, that was around strata buildings, and she even said herself it was a preliminary report. It wasn't even comprehensive, and yet it was quite astounding, very, very interesting. But also what the Building Commissioner David Chandler's been doing as well has been really focusing on that problem being at the design end. So in New South Wales in particular, that whole model of design and construct, I think has been...
That's for class 2 buildings.
It's taken out of residential now, which is good because that's been part of the problem. So if you're building a commercial building, it's design and construct. That means that the builder's basically designing it as they go. Then because you generally got one customer, there's one customer for your building, as opposed to a residential building where you've got maybe 100 unit purchasers are all buying, and they don't even know who each other are until it settles and they form their first owners body corporate. So owners corporation. So, and also most individual unit holders got no idea about a building and how they function or how it should be built or whatever. So it's a completely different type of building and type of ownership, and the handover is completely different as well.
And I think it's fair to say that, and nor should they.
No.
I think people are entitled to buy a property and not have a builder's degree.
Exactly.
I think that there is some element to you probably should educate yourself a little bit, but at the end of the day, you should be entitled to be able to buy a unit and not have to know whether waterproofing has been done to a certain code or whatever it might be, right?
The expectation it's been done to a certain code. And I think that the issue here is there's been an opportunity for those who may be a little bit more, self-interested and a little bit cynical, perhaps, to take advantage of that. And so it's a good thing in New South Wales anyway that the loop for that has been closed. So that is great. But back to, I think the underinsurance issue here is I think potentially more of an issue with individual owners of Torrens Title properties. Would you agree?
Yeah. Yeah, and look, the big issue we see there is probably more the commercial side. So yes, the mum and dad probably through the naivety, lack of education side of things, but certainly from the financial point of view with, say, commercial property, if you're underinsured, the insurer then deems you a co-insurer. Right. So you're a joint insurer. So for argument's sake, if you have $1 million property, or it should be $1 million property, and you decide to only insure it for $800,000, you're deemed to be only insuring it for 80% of its value. So you become the co-insurer. In other words, you're taking the risk of the other 20. So then if there's an issue, the insurer will only then pay out 80% of the 800. So you're only going to get paid out 640,000 in a total loss on your $1 million property. And the reality is that is the exact same percentage for partial loss. So if they work that out on your full property, but you've only had the roof was destroyed at 200,000, well, they're only going to pay you 80% of the 200,000. So, with the commercial property, if you're underinsured, you certainly can have some big exposure in regards to what you're going to get out.
So obviously the assumption is that if you're in a commercial property owner, that you are commercially minded and able to assess all these risks, whereas the assumption being a residential property owner is just a domestic customer and therefore not having that same understanding or expectation. There's a little bit the same in the auction laws in New South Wales. There's all these requirements. For instance, bidders have to register to bid at auction in New South Wales for residential property. You don't have to register for commercial because the rules aren't as tight, because the assumption is that you're sort of more fiscally aware or smarter or something than a residential buyer.
Yeah, and same as with building code, in terms of building qualifications in New South Wales. I think the big difference there, Veronica, is that generally speaking, a mum and dad person in the suburbs for their house insurance will go direct to the insurer.
Yep.
Whereas a commercial client will go through an insurance broker. Yep. So they're getting that extra level of education along the way. So they're getting the insurance broker in their ear saying, have you had this assessed properly? We need to probably have this certified to make sure that it's the right value. Or have you considered this? Or have you considered that? Whereas someone jumping online and going direct to an insurer isn't necessarily having those same touch points or education along the way.
Yeah, Marty, I guess it's like, let's say you're listening to this, you think you've got enough insurance, even if you've, even for me, I upped my insurance. Last year I was looking at the trees around me and I was just like, I don't think I'd be able to replace my home for what it's insured for. It wouldn't take one of those big trees to fall over and, it'd be a wipe out our house. And I noticed that the bulk discounting was quite good, actually. So I doubled my cover and my premium didn't anywhere near double. I think what's interesting to know with any insurance is what's not covered. Like Allianz, for example. Like if you're not in your home for more than 60 days and you don't tell the insurer, like you go on a 3-month holiday and something happens, after 60 days, I'm pretty sure you're not covered. Like,
oh, wow.
Like termites, for example. People might think that you're covered for termites, but I don't think you're covered for termites. And that's another risk, So what are some of the things where people, people think, well, she'll be right. I've got insurance. I'm fine. And a lot of people think this around income protection and life insurance. And, sometimes they don't understand the clauses so what are some of the things that catch people out there that people even aren't insured?
Yeah, security systems are a good one as well. On their policy, they'll say we have a security system or this or that, but and they have insurance for 10 years, but after 3 years it stops working and they don't update it, or they do a bit of a reno and they change things around, or they put in different windows, or those kind of things are certainly one of them. Fire alarms are obviously a big sort of part of updating and changing things around and the like. But the reality is that it comes down to priorities, and we have to change people's mindset around prioritizing. So people will come, as an example, people will say to me, money's really important to me, if they're talking about a fee or something, but they might drive a BMW, so there is a cheaper car to buy than a BMW. Now, so at what point is it a priority? And absolutely. I guess when it comes back to, say, insurance, I know many people that would research the backside of a TV for a spare bedroom that will get used every now and then, and they'll research 10, and they'll go to JB Hi-Fi, and they'll play it against someone else, and they'll know how many USBs it's going to come with or how many HDMI outlets it'll come for, and it's a spare TV. But they will never, ever have read their PDS for their insurance on their house. They would not know what percentage they get for consultants or what percentage they get for demolition on the back of their policy. And it's a priority. We haven't prioritised it.
It's such a classic. I mean, we often make the same sort of comparison with how
Yeah.
the assessment process people go through in buying a property.
Yeah,
you know,
it
they
is the
spend
same.
more time choosing a toaster. And I guess insurance fits in the same category. It's complicated, expensive. You know, it's much better to go to level one thinking and go, oh, just go for the easy out because I don't want to have to think about it because it hurts my brain. But
And that's where I would say to someone, use an insurance broker, even on your residential house. I mean, in the residential sector, you know, it's next to nothing to use your insurance broker.
Yeah.
all right.
And they will advise you on
think
these
that's
Thank you
what
so
I'm
much,
gonna do.
Marty. Have you got a quick property Dumbo for us? By the way, we sometimes forget to do this. I would love if you got any stories about. I mean, sure, in this conversation, there's probably thousands of them, but
There's certainly lots of Dumbo moments. I mean, I think I spoke about the last one about someone who was a pub that was insured, and probably another one would be another recent pub that we've just done. And you know, their idea is that they only wanted to insure a certain part of the pub. They didn't want to insure all the accommodation at the back. They were comfortable with that. They just wanted the pub to be done. So we did the assessment on the hotel sort of the pub side of it. Sorry, and you know, they have now got a co-insurance issue because they didn't add the other policy to it. So that when the insurer comes out and says, well, but you've only insured the pub, they just felt that was the risk. That was a bit they weren't comfortable with. But at the end of the day, it's all in together, and they now have an underinsurance issue. So the reality is that they were kind of going about it the right way in regards to getting an independent assessment done, but they were still controlling it. You know, that the idea should be that get an independent person to come out and tell you what the total loss, the total building will be. That we just had that recently.
You know, I've got a that is sad and avoidable stories like that. I've got a Dumbo story I'll tell you very quickly. I was up at the Gold Coast with a friend of mine, and up in Queensland, in strata building, if they're going to vote to do anything substantial, they have to get 100% agreement, right? So if they want to sell to a developer, for instance, or whatever. So there was this building in Gold Coast, Coolangatta. Thank you very much. Down in Coolangatta. So there's this building that every front apartment had a big, stonking big ocean view, but there was a site in front that could have become a development site, right? And one of the guys who lived in the building owned an apartment in the front building to protect his view. He bought it to preserve his view. And when he sold out of the building that he was living in with view, he said he was going to sell that apartment, and he offered it to the body corporate to say, if you guys all pitch in and buy this apartment from me, you can continue to preserve your view. And they turned him down. And right in front now is an entire massive big building that is obliterating, it's being built, that is obliterating every single view in that building. Now, I have to say that has to be one of the biggest dumbos I've ever heard.
We did it. You've brought back an old memory. About 10 or 12 years ago, we were doing a property up on the far north coast, right on the beach. And the new building code was that they could no longer build that close to the beach. So it was a big block, like in the thousands of square meters. So it basically meant if they knocked down that house and rebuilt their dream home they wanted to do, it needed to move up the site about 40 or 50 meters. So the idea was, though, that through a little bit of clever thinking by the architect, if they basically knocked down the whole house except one wall, it was still a renovation as opposed to a new build. So they basically were going to build this big house in the front, come down and, you know, renovate around and include a little bit of this old house. And that got through. That was fine. So it meant they could build their house right down on the sand, basically where they wanted to go. And I get a phone call from the developer, sort of fuming, going, right, I now need you to do an expert witness report for court. And I'm going, oh, what's going on? That communication wasn't expressly portrayed to the demolition company. So they came in and demolished the whole house and left one wall, and they had it propped, and that was what it was. But the next day, the rest of the demo crew came in just to clean up and went, oh, we still haven't finished. There's still that one wall to come down. So the final wall came down, and council were nice and handy on the site to go, right, now you got to rebuild up you can't rebuild down here. So there'll be a big legal stoush over that. That was years and years ago.
I keep going on, but a mate who, they're a developer, and they were doing a townhouse development up in Newcastle, and they had like an architect plan, and then on that in colour they had like green and red around trees, and the person, the sort of what you call arborist sort of rocked up and printed it in black and white.
I thought you were going to say they were colourblind.
He took out there was 20 trees. He took out 17 trees or something instead of 3.
Oh, no.
The whole site. So the whole site got basically decimated, and and then they rocked up, and there was 3 trees left. And there was meant to be 17 trees left.
Oh, no.
And so then the whole, it was a massive uproar in the community, because they're like, hang on a sec, you're not meant to remove all these trees. And they had to redesign everything, because it was like designing it all around the trees, and then it was all, there was no trees. And I don't know where the story ended up, but he told me what had happened the day after. I was just like, yeah, anyway.
On that note, we'll see you next week.
Thank you.
If you're looking to buy your dream home or an investment property in Sydney's inner west, eastern suburbs or North Shore, my team and I can help you buy without regrets. Reach out via my website, gooddeeds.com.au.
If you're looking to buy your first home, thinking of upgrading into a new one, or purchasing an investment property anywhere in Australia, my team would love to carefully guide you on this journey. And most importantly, get the finance right. Reach out via our website, wealthful.com.au.
Thanks for joining us. We'd love to see you again.
And remember, don't be a Dumbo.